Hi, I'm Brian Arcese, one of the multi-counselor portfolio managers on the Foord International Fund and the Foord Global Equity Fund. I'm here with Ishreth Hassen, also a multi-counselor portfolio manager on our Global Equity Fund, our Asia ex-Japan Fund, and our Sharia Global Equity Fund. Now, Ishreth, if we talk about some of the ESG investing, climate change, renewables, energy transition, all of these terms are in the popular press and in the investing press with increasing frequency. But if we kind of take a step back and talk about the energy transition specifically, maybe you can help us kind of define what is the energy transition, and then also how should investors be looking at it?
Sure. So basically, the industrialization of the world and large countries over the past few decades has led to rising global temperatures and increasing greenhouse gases in the atmosphere. And if this is allowed to continue unabated, then it's going to cause real problems for future generations and natural ecosystems in the world through things like global warming. So there's a big effort now to move to a net zero world by 2050. And what that means is that amount of greenhouse gases released into the atmosphere needs to be offset by the greenhouse gases removed from the atmosphere. So what this means, among other things, there are lots of pieces of the puzzle, but as far as the energy mix goes, what this means is that the mix needs to shift from being very carbon intensive as it is today to being as carbon light as possible. So moving away from very carbon dense fuels like coal, oil, and gas in that order towards renewable sources of energy like hydro, solar, wind, or nuclear for that matter. So yeah, in short, that's pretty much what the energy transition is.
I mean, even there are seemingly many ways forward. Even if you look at renewable generation on its own, solar, wind, then you separately have carbon capture, nuclear. I mean, how should investors kind of pick and choose among these and really position their portfolio to kind of take advantage of the energy transition?
The thing is, this transition isn't really going to be as smooth as people expect it to be. I mean, what you typically have with the market is people linearly extrapolating a certain trend into the near term and the long term, and that rarely happens. I mean, we expect it to be quite a bumpy ride going forward. For one, more than 75% of the world's energy demand still comes from Asia and Africa, where prosperity is just getting started, and where the development requires low-cost energy like hydrocarbons, oil, gas, or even coal for that matter, which these parts of the world are very heavily dependent on. And at the same time, the cost of renewable energy sources is escalating quite dramatically, because although the wind and the sun are free, harnessing that energy is not. I mean, you require wind turbines, solar panels, batteries, and all this because the renewable sources are not dense forms of energy. So you need to collect it and then harness it, and it's very material intensive. So you need a ton of things like copper, lithium, nickel, all of which in short supply, if you believe that renewables are going to play this role to net zero and offset hydrocarbons. And at the same time, the hydrocarbon producers aren't really investing in new supply to keep up with the demand that they'll have in the coming decade. And renewables are definitely not going to be able to fill that gap over the coming decade. So, I mean, the way we view it is that you need to be in parts of the energy mix where your earnings and free cash flows can continue to surprise on the upside. From that perspective, we like the oil and particularly the gas companies even today, where we feel the market completely misunderstands both the cash flows and the value these businesses will hold over the coming years. But at the same time, we also own several very interesting companies that will play a pivotal role in the transition to new energy. And we call these the guys who provide the picks and shovels into enabling the infrastructure around the transition to less dense sources of energy.
And no doubt some of the most interesting companies, at least to investors, when you read about this space, are sort of these leading edge technology companies that maybe they're in the hydrogen space, or maybe they're supplying a specific technology into renewable generation. But how do you guard against kind of investing in one of these leading edge technologies that may sound really interesting, but that ultimately may not be successful in the end?
Sure. I mean, those who know Foord would know that we never make 0-1 bets, right? So, of course, I mean, in this case, I don't think we're really betting on any technology winning or any solution being the dominant solution. I think the way we look at it is that at the mix as a whole, and we want an adequately diversified energy portfolio such that no matter what the outcome, this group of businesses should outperform both the energy sector and the market. And so the way we do that is sort of looking at the inevitable trends at play and constructing a portfolio around it. So it's more an exercise of portfolio construction as opposed to picking any one winning technology or business.
Sure. And can you give us an example or two of something that may be in the portfolio currently that, while it may not be a pure play, is still sort of a beneficiary or at least within the value chain of that energy transition?
Sure. I mean, as I mentioned, we like the companies that provide the picks and shovels that enable these new technologies and new energy mix. So I mean, one company that we've owned for a while is Quanta Services. They're basically one of the highest quality contractors in the United States that service the utilities there, enable them to build out renewable infrastructure that moves the energy mix towards renewables. And that's done phenomenally well as the rising tide around renewables has increased investment in that space. And then we own companies like Baker Hughes, which was a traditional oil services business, but they acquired GE's turbo machinery business, and now that's half of Baker Hughes. And they supply turbo machinery into the LNG space. And they're the leading provider there with the best technology. And LNG is, again, another inevitable part of the energy mix that will continue to compound for the next decade or so, just given the security implications around gas coming from Russia and so on. Those are just two examples, but we also own the new energy materials companies. So, for example, a company like Freeport, that's one of the lowest cost copper producers globally, or Livent, that has the lowest cost lithium, one of the lowest cost lithium mines around, and we've owned these for a while, and they've already served us quite well, but they'll continue to be very relevant for the energy transition going forward.
Is there anything that you think investors are missing in their research about energy transition, or how they may be positioning their portfolios today?
Sure. I mean, the thing is, these transitions are always difficult, I mean, they'll where people really misunderstand them is in terms of the duration and the path that they'll take, because often the market linearly extrapolates current trends. And in this case, there are lots of things that can throw transition off this linear path. I mean, for example, very high cost of capital today, right? These new energy projects and infrastructure build out was already extremely unprofitable and needed to be heavily subsidized. And now the cost of capital is the highest it's been in 20 years. And what impact will that have on this transition? And then the cost of materials required for this transition is going to increase quite dramatically, because there just isn't enough supply of it to satisfy the demand needs. And also, in terms of the traditional hydrocarbons, there's not going to be enough supply to satisfy the demand for them, just given this gap that's going to emerge. So there are lots of unanswered questions. And to say the least, it's going to be a very exciting time for the energy sector over the next decade.
Yeah, no, I mean, there's certainly a lot of evolution to take place. It is heartening to know, though, that investors can invest, I mean, as you do and as Foord does in our portfolios, in the energy transition without needing to invest in leading-edge technology that may be a 0-1 bet, for example. But no doubt this trend is certainly here to stay and something I'm sure we'll be talking about again. So thank you.
Sure. No, thank you.